Hi guys, thanks for tuning in to another episode of Nuggets News. Today's episode is going to be a little bit different. We've got a few slides for you to talk about gold and silver and how we want to examine the different stocks out there. We're starting to get a lot of questions about this, and we do have a guest who's only got audio, so some of you will be listening to this on the podcast anyway. But welcome to the channel, Michael, who's someone who really helped my journey early on a lot of the gold and silver threads when I was starting to learn how this all works. So yeah, thanks for helping me, Michael, and welcome to the channel.
Thanks very much, Alex. Good to be here.
So do you want to maybe give people a bit of a rundown into your background? Because I know you're pretty experienced in this industry.
Yeah. So my technical background is actually as an engineer, and it's in the mining industry, but not really in a core sort of operational capacity. Mainly in supplying sort of engineering infrastructure to mine sites, I guess. I started getting interested in the share market probably 10 years ago, I guess, like a lot of people do when they start their sort of first professional job. You have a bit of money, you want to invest, and probably after a year or two I started really getting interested in the mining sector. Being exposed to those companies in my normal work, it sort of came a bit naturally. So that was probably about 2011, 2012, and that was probably a pretty bad time to get interested in the share market in the mining sector. That was just when the commodities sort of boom and really peaked out. And most sectors are in a pretty heavy bear market by 2012, 2013. I was dabbling in a lot of ASX stocks that were sort of across most commodities: oil, gold, copper, nickel, uranium, lithium, tin, anything really that I'd sort of come across. And I guess my approach then wasn't overly, didn't have really a professional approach to investing, and that's something I tried to really develop. And I guess I did a CFA level 1, which is sort of the main qualification for analysts in the broking industry or in investing in general. Really to understand valuation principles and sort of the drivers of the share market. I read a lot of news, read a lot of books, and that was sort of by 2014, 15. I was pretty much exclusively in the gold sector.
Yeah,
and that's at that time it was. That was probably the depths of the bear market in the gold sector. There were a lot of stocks trading on ridiculous multiples, and that was probably a good time to get interested in, I guess, then.
I know for people at home, gold and silver peaked in around 2011, and it's similar to the crypto space in a lot of ways that these commodities tend to have big cycles, and it can be a pretty steep learning curve compared to the stock market that maybe hasn't had a big crash, 10, 20 years or so. So I certainly think that you can learn a lot pretty fast from getting into these sectors, particularly being fresh and getting in at a good time and then experiencing a bad time early on.
Yeah. So I think I guess I tried to do a lot of my own research then. I've probably read every quarterly report from every gold company on the ASX, or the top 20 companies, say, for the last 5 years. I've read every quarterly report, most of the announcements, reading a lot of feasibility studies, stuff like that. I guess my technical background kind of helps me a little bit there, develop that understanding. And then I sort of started a video blog in 2015 about just trying to combine sort of fundamental research with technical analysis. And that was probably by 2016, I thought I was sort of reading a lot of macroeconomics, and I thought the gold mining sector was really in a good place to explode, I guess. And it did for about 9 months in 2016.
Yeah.
And I think that's when you and I sort of first got talking, and that was a really good period, and it was sort of, it validated my sort of thesis that this could happen. And but then it was kind of I thought it was it might be a bull market the last 5 years, and it only lasted 9 months. And then since then it's been a little bit of a sort of gone back into a depressed state in the junior mining sector anyway.
Yeah, I certainly learned a lot in that period. But I was, I guess, forced to dollar cost average because I'd only sort of started full-time work in about 2012, 13, and I had an interest in gold and silver stocks, but I didn't have a lot of disposable income. So I was sort of dollar cost averaging into a lot of those, and then that boom happened. And again, I learned a lot from not taking enough profits and thinking that was the start of a new bull market. And I guess that prepared me for other lessons in my investing life, but it was very exciting at the time, and some of those stocks had tremendous crypto-like returns, didn't they?
Yeah, absolutely. Yeah, it was. I know one of the main stocks I was holding at that time sort of had about a 600 or 700% move in 9 months, and a lot of the big producers, it wasn't just confined to the junior space. The big producers are still moving 200 or 300% or more in that 9 months. And then when Trump came in, and that sort of ended it, and the gold price sort of declined again. But I was sort of in the belief that the sort of macroeconomics behind the gold sector was probably going to come back in at some point, and it's kind of been a bit of a waiting game. And gradually, I guess it's taught me a lot of patience as well to be in these stocks while they've been in a malaise. And then obviously in the last 3 months, like you said, there's a few people who've been asking you questions. The gold sector's really kicked off, and a lot of the bigger producers have already moved, say 100%. I mean, not even big producers. Those are companies that might be a $500 million market cap on the ASX might have moved 100% in the last 3 months.
Yeah, so before we do get into how you sort of go about valuing these, and I guess that was one of the things that attracted to me because I was sort of coming at it with that fundamental technical analysis, and your macro view is what I'm interested in because a lot of people are starting to wake up to that whole central bank cycle and maybe more QE, negative rates are coming, and timing's everything because there's no point being right and being 5 years early if the stocks all go down, another 50%. But now the broader market is starting to wake up to all this. Do you agree?
Yeah, absolutely. Yeah, I think with with interest rates, close to negative almost everywhere in the world, and I think with the Federal Reserve's really cut. It's they're now in a cutting cycle. They were still in this even up till 6 months ago. Everyone was expecting them to be raising interest rates, and that's been a pretty rapid turn. And now market expectations have completely changed everywhere in the world, and you can see even in Europe they're talking about QE or something else. It's kind of we're almost in a something else phase. When QE started 10 years ago, that was very new and alternative policy, and now that's sort of become the norm. But we're kind of at a point where it hasn't really worked, and I think now there's definitely a danger or an opportunity, I guess, for the gold sector investors anyway. But that central banks go too far, or inject too much liquidity into the real economy, and that creates inflation or something else. It's kind of a bit of an unknown, but it's hard to see how that's going to be bad for the gold sector.
Particularly in Aussie dollar terms. I know the Aussie dollar's absolutely tanked since we first crossed paths, and that's really helped the Aussie dollar gold price, and that helps the Aussie producers, which I'm sure you'll touch on in just a second. But I think Australia Central Bank is not really thinking of doing anything different or independent. They're talking about lower rates in QE. They're going to try the exact same stuff.
Yeah, and I'm sort of a believer. I know you've had some people talking about housing and stuff on your podcast before, and I'm a believer in the same sort of thing, that I think the housing sector is incredibly overvalued, and the Australian economy is, on a sort of a dangerous edge, and it's quite possible that it's, and the currency I think is warning of a lot of that, and I've been sort of in my videos talking about particularly the Australian dollar gold price for about the last 3 years, and sort of had a target of about $2,000, and that's, it was sort of sitting under that for a while. And in the last 3 months, it's gone from 1,800 to almost 2,300 the other day. So it's really exploded. And now I think there's, the Reserve Bank of Australia could really, if they go to zero and do something like QE, I think that would crush the currency, probably, sub 50 cents.
Yeah, no, I remember actually getting sort of like laughed off. I actually got banned from Hot Copper in the end because I was sharing a lot of stuff on Bitcoin and crypto, and people thought it was a scam back in the day. So I got banned from Hot Copper. But I remember doing the math of just saying, the Aussie dollar's at 85 cents and saying, I think the Aussie dollar could get down to 66. And if gold's anywhere near, 1,400, that gives us 2,000 Aussie dollar gold. And here we are at 2,300. And these things can change pretty fast.
Yeah. I mean, I guess the Australian dollar is a risk currency. So when markets go sort of risk off, the Australian dollar tends to fall quite a lot. But at the same time, that's when the gold price tends to rise in US dollar terms. So you get this sort of perfect storm events where you can see these big moves in the Australian dollar gold price. And a lot of those larger producers have already, while the junior gold sector has really been a bit depressed for the last 3 years, the larger producers have moved, a lot of them 300 or 400%, like the sort of mid-cap Australian gold miners maybe you can talk to if you bring up the next slide, I can talk to a bit about the structure of the market.
Yeah, for sure. So we've got that slide number 2 up now, if you want to walk everyone through that.
Yeah, so this was just some notes I made. I mean, there's some of these numbers apply on the main markets for gold companies, the ASX in Australia and the TSX in Canada. So probably double these the rough numbers I've got for producers and the different sizes of companies there. Probably double those numbers for the Canadian market. It's a bit bigger, but generally, and the picture I've got on the right is from Exploration Insights, which is a website I follow, and it's there's been a few different variations of this chart, but it really shows the journey of a company to becoming a mining company. So from a explorer with just a land package and with an idea of where gold could be to finding a resource, doing the economics and engineering about that, getting financing, and then to become a producer. So I tend to focus, I guess for the last few years, I've probably focused more on the producers, but the real money in the sector is in finding those discovery sort of plays and riding them, particularly if the macroeconomic side and the gold price is happening at the same time. You can sort of see those. I mean, it's got relative value on that chart there. And those numbers are not impossible. Seeing those 200, 400, 1,000% returns in a real bull market in particular.
Yeah, and there's a few points I wanted to sort of drive home, particularly to our audience, that speculation and investment can be healthy. And a lot of these investors in this space, they know it's risky and they know that they're going to lose on a lot of stocks. But if you pick the right winners, they can outnumber and outgrow those losers. And we see this cycle here of speculation when they have that first gold deposit. And it's a little bit like I see in crypto in the startup space. There's companies with good ideas and they make their first bit of progress and they really run in value, but then they have to outlay capital. There's this period where sentiment dies off and they can go down, 80 or 90%, but then later on they develop and they actually start producing revenue, and that's when they boom again. It really reminds me of the crypto space.
Yeah, I think in the last couple of years, it's really probably been a survival story in some of those juniors. So they, the ones that have gone down that 80%, which is a lot of them. How do they survive? How do they keep financing and to keep doing their work to develop a deposit? And a lot of that comes down to good management. Maybe if you bring up the next slide there, I've got some factors that I sort of look for in companies I'm investing in.
Yep, that's up now.
Yeah, so that's I guess these are what you might call hard factors. They're really about obviously if you're investing in a gold mining company, you want to know what the gold price is doing. So that's the sort of stuff we've just been talking about. Supply and demand probably is not a huge factor in the gold market, and it's often a difficult concept for people to grasp. But I mean, the above ground supply of gold doesn't get consumed in the same way that something like copper or zinc does. So it's really that's a trading supply that can come into the market. So every year the gold inventory of gold might only increase by 1 or 2% from new mine gold coming.
Yeah.
So that doesn't really apply as much in gold. It's more sentiment driven, and you do have something like central banks, but there's not a demand from like jewelry and this sort of stuff. I mean, all the gold that's ever been mined kind of still exists, if that makes sense.
Yes. Yeah.
So then obviously you've got stuff like the scale of the resource and how big this mine could be. So resource is a sort of an earlier definition of it doesn't take into account the economics of that mine, whereas the reserve is based on a feasibility study usually.
Yeah.
So if a company's going to develop a mine and get financing for that mine, they'll need a reserve. A resource is a geological assessment of how many ounces they have in the ground, but it's not a economic assessment.
Yeah.
So then you've got obviously your operating costs, where they sit on the cost curve. So a cost curve is really, you want to know if this mine is going to be able to survive if the gold price goes down, 20%. Are they going to be underwater and start losing money? And that, is a real danger in the sector because of the volatility of the gold price, and its operating costs are not easy to predict, and even feasibility studies don't give you a good guide sometimes.
Yeah, and there is a fair bit of overlap here with Bitcoin and mining difficulty and cost of electricity, and when the price of the commodity drops, a lot of those Bitcoin miners go offline. It's very similar in the gold space.
Yeah. So, yeah, crypto is probably a bit more hyper than the gold space, but it happens in over a 6 or 12 month period. If the gold price is really falling, you can see these companies go to the wall fairly quickly.
Yeah.
And there's been a few examples of that on the ASX recently with developers who had good feasibility costs, and then when they actually start producing, their costs are 30% higher, and they're wiped out within 6 to 12 months.
Yeah.
So I've got mining method there as well. So whether the deposit is open pit, and an open pit is generally if the gold is sitting within sort of 300 meters of the surface, and is sort of continuous and can be mined easily with an open pit. That's probably a cheaper and less risky method in general. Yeah. Whenever you go underground, it's harder to have as much certainty in what's in the ground, and the technical parameters are a bit more difficult to pin down. So there's a level of uncertainty, but I mean, underground mines can be incredibly profitable. Underground's obviously higher grade as well, generally, to justify getting the ore from underground.
Yeah.
Metallurgy and recoveries are more sort of difficult concepts, and that's really how much, if you dig up an ounce of gold, what percentage of that ounce are you actually going to get at the end of a processing plant when you process all the dirt and get a gold bar? What percentage was left? So that generally for a new mine, that might be sort of 85 to 90% or higher for high grade mines, often up to 95%. So that's a very technical field, and I guess each of these is you can read books on all of these in general and listen to a lot of people talk about each factor. So I've tried to sort of really train myself in each of these and read a lot of feasibility studies, and I guess by just looking at a lot of companies, you get to see how a deposit develops and how these things can impact a company. The best way of learning some of this stuff is, if you lose money because of bad metallurgy or bad feasibility studies, you kind of learn those lessons.
Yeah, and I definitely want this just to be a bit of a sort of overview for people, and we might get into some more specifics in future episodes or more specific stocks.
Yeah, absolutely. If you want to look at the next slide there, the sort of what I've called soft factors.
Yeah.
These are really not about what's in the ground necessarily. It's more about who's running the company. Mine location and jurisdiction is a big one. There's a lot of ASX investors tend to flock to the safety of Australian producing mines and deposits. That's perceived as a lot better place to mine, and that generally is true if you compare it to something like West Africa or Central Africa. Like there's a lot of countries there that are incredibly risky, but the trade-off is that the deposits you're investing in Western Australia, for example, just don't have the grade or the potential economics of something that you might get in West Africa.
Yeah, I think we saw one in, was it Thailand, KCN I'm thinking of, where the government stepped in?
Yep.
Yeah,
absolutely. Yeah, Southeast Asia's been a bit of a graveyard for a lot of Australian companies, like Indonesia and Thailand. Philippines has had a lot of issues as well.
Yeah.
And particularly like open pit mines as well in the Philippines, for example. It's incredibly, an open pit mine is incredibly obvious to the local population, and if they're not perceived as getting a lot of benefit out of it, it's such an easy thing for people to, and that's why I've sort of put environmental issues here as well, because you can kind of, when you get that groundswell of popular opinion against a big open pit, it's pretty hard for the government to kind of push back sometimes.
Yeah, absolutely.
And management is a big one, and it's a hard concept to really, I guess, when I look at if I look at the background of people when I'm investing in a company, everyone's got a good background almost. It's like reading a CV. They will have worked for big companies before, but it's hard to know, what core role they necessarily had. So you need to find people who have, really led companies and had successful mines in the past, and a record of without any real blotches on it.
Yeah.
That's a hard one. It's like I said, there's a lot of people who seemingly on paper are successful, but you need to drill down. You don't want people who have been developing uranium deposits, for example. You want people who have got gold experience, And if they're developing a deposit in West Africa, you want people who've got gold experience in West Africa, like really specific stuff. And it's a difficult one, but it's sometimes is the difference between, two companies with the same deposit and a different management team. One can go broke and one could be a 10-bagger. Sometimes it makes that much difference sometimes.
The same in a lot of industries, in startups. It's all about execution at the end of the day.
Yeah, absolutely. Yeah, and I guess you want people. Sometimes you want management. If it's developing a deposit and defining a resource, it might be more appropriate that the person in charge is probably a geologist or someone in that field. But if they're actually building a mine, for example, or producing from a mine, you might want an engineer or a mining engineer in charge of that endeavor, because it's a different skill set. Geologists tend to be, conceptual, and they're really often are dreamers, whereas engineers might be a bit more practical.
Yeah.
Some people can cross over, but it can be difficult. Cash burn. If a company, mining companies, obviously at the the whim of the market. If the market's not in a good place, they constantly need to raise money to do more drilling, to develop their deposits, to fund these feasibility studies and build the mine. So you want people who can survive on, limited cash for a while, particularly if it's been a bear market. Obviously, if the market picks up and there's a bit more appetite to invest in these stocks, cash is a bit more plentiful in the sector, so it's not as a bad a time for those companies. And I guess the drill results and news flow, creating excitement, particularly in a bull market, that's quite important. Some people are just not good at marketing themselves. And that's another one of those things that's hard to judge, hard to know why that is. I guess, geologists and engineers might not necessarily feel into that. And I think in this day and age in particular, with social media and all these sort of things, the industry has kind of changed, and some people haven't really adapted to that.
Yeah, that's one thing I was going to say. I think since the last bull market, we really have had the booming of social media, and I'd love to maybe interview some of these CEOs, but I just don't think they'd be up for that. Coming on YouTube and Twitter, it's just a different world.
Yeah, absolutely, and I think it's still viewed as it's a retail investors kind of thing, and a speculators market. But I can only see that getting bigger and bigger. And like the number of retail investors on some of these forums and on your podcast, for example, is huge, and that it can make a big difference. So it's not just I think these companies will gradually be more likely to go into the social media and that sort of stuff as well.
I hope so. Yeah.
Yeah, absolutely. So share structure, that's similar to, I guess, cash burn. If a company's developing a mine, you want them to be able to do it. You don't want a company that's got 1 billion shares on issue at 10 cents when they're about to start a mine, because it puts a brake on the share price. There's a lot of stale shareholders who kind of want to sell out when the share price moves from 10 cents to 12 cents, for example. And it's just something I've noticed. In theory, it should make a lot of difference sometimes.
I completely agree. It's the same in crypto. Unit bias. People come in and they see things that are 1 cent, and it's not as bad, but definitely similar.
Yeah, I mean, it attracts a different kind of investor or trader as well, I think.
Yeah.
If someone buying a 1 cent stock is probably more likely to be a trader looking for those easy gains and then selling out, and it creates that more volatile share structure. Liquidities for a retail investor, probably not as big a deal, but some of the smaller companies, they might only, if they're $100 million company, some of the smaller ones might only trade $50,000 to $100,000 a day, which can be difficult if you want to build a position. You've got to be patient, and but there's also liquidity sort of acts in your favor, I guess, in a bull market. If they're good companies that bigger investors want to get into, they're going to have to bid up the share price significantly.
Yeah, which is kind of what we've seen recently. Now that they're profitable and that there's more moving into the indexes, it just brings that liquidity, and the smaller, nimble investor can have a bit of an edge, as you say.
Yeah. I think there's a quote from Doug Casey, who's a sort of a renowned sort of gold sector investor, and he talks about when the the rest of the market wants to get into the gold sector, it's like the contents of Hoover Dam getting through a garden hose. There's so much liquidity and not many places for it to go. So it pushes some of these stocks up dramatically, very quickly.
Yeah.
Notable holders as well is a big one. So like if I'm looking in a company and I'm sort of looking at it as a takeover candidate, if you can see that there's someone on the register who holds 15 to 20% of the shares, that's a guide that at least, I mean, if a bigger mining company has done their due diligence on a company, a smaller company, they at least think it's good. You know, they've got geologists, they've got engineers, they understand the industry. So if they're investing, that's often a good guide. It's not a guarantee that it's a good company, and they might have a more strategic focus and looking further down the line. But it's a better guide than anything as an individual I can do.
It's similar again in a lot of ways to the startup space or any industry where if a CEO and the team are paying themselves in shares and options with a future date in mind, it's different to pulling a huge salary and just sucking the cash out of the company.
Yeah, absolutely. And proximity to other mines, I guess that's sort of often, in WA, for example, there'll be existing processing plants, maybe within 100 kilometres of a deposit. And that deposit will therefore have a lot more value to an existing producer, because they could truck that ore from there to their existing processing plant if they have capacity. So that's a good one for particularly companies that might have sort of subscale resources or reserves. If they're less than 1 million ounces in the ground, for example, often it can be difficult to get financing for that. But if they're nearby to existing processing plants and infrastructure, they might. There's a good chance that they can get bought out. And there was one just this week, Northern Star, which is probably the third largest ASX company, gold company now, second largest.
Yeah.
Bought out Echo Resources, which is got deposits probably 100 kilometres south of Northern Star, and a processing plant as well. So it's been a no-brainer for a few years. But and Northern Star was a 20% shareholder in there, so it sort of goes with what I was saying when I said any notable holders there as well.
Yeah, it reminds me a little bit of Google and Facebook buying up these smaller plays, absorbing their technology, same sort of thing in the mining space.
Yeah, absolutely. Yeah, there's a lot of strategy here, and I think I've sort of seen you see these little strategic moves. 2 or 3 years ago, Northern Star buying these shares, and they're willing to sit on them and wait for Echo to have to burn cash and to get a little bit desperate, and then the shareholders get a bit more despondent, and then Northern Star can come in with an offer later. It's no different from any other sector. I guess it's just a bit more. There's a lot more strategy here sometimes in terms of land holdings and stuff like that.
Fantastic, mate. Well, I really appreciate that. And I think we're going to look to do some more work together in our newsletter or for our members, because I think there's a lot of talent in there and I want to keep picking that brain. But any final thoughts for people at home that are maybe interested in getting into this space? Yeah,
I guess probably you got to be careful. I mean, and the purpose of sort of outlining a lot of those factors is to understand the risks. And there's a lot of bad companies in this sector as well. So you've got to know what you're investing in and really pick and choose. You don't want to be scattering across 50 different gold stocks, because the reality is that 40 of them probably don't have something that's of value. I mean, in a real bull market, everything will probably go up, but that's not necessarily because the companies are good. That's really from just liquidity coming into the sector, like we talked about. So you got to be really selective and pick your battles. And I guess that's probably something that maybe we can talk about in the future and expand on some of these factors and how I use them.
Fantastic. Well, guys, if you've enjoyed that or you've got any other questions or comments, things you want us to cover in future, let us know down below. But thanks so much for joining us today, Michael.
Thanks very much, Alex. It's been great.
Cheers, guys.